Welcome to the Tesla Power Podcast, the unofficial Tesla energy community, covering solar panels, solar roof, and Powerwall for your home. I'm Aaron Brady. Today, let's talk about a rumor that 4680 is coming to the Powerwall. Let's talk about other battery suppliers bringing the 4680 to production, and let's talk about Tesla providing glass roof tiles without solar. Let's do it. As we get comments and questions, we'll start the show by addressing them. If you have anything you want to contribute, you can leave a comment below. You can call 203-816-5150, or you can email teslapowerpodcast@gmail.com. No input to share today, though we can get right into the news. If you aren't watching or listening to Tesla Daily, you need to start. It took me a really long time. In fact, I was a complete moron and shorted Tesla stock at the beginning of the pandemic last year. Guess how that turned out for me? And I shorted it because I wasn't listening to Rob Maurer's awesomely thorough, unbiased perspective. You know, he covers the good, he covers the bad, and he does it all without hyping or dismissing any of it. It gives you a really nice, balanced, integrated view of the company's current progress and its long-term prospects. And here you can see a series of tweets that he covered that seem to indicate that the 4680 is coming to Powerwall soon. Zappalito tweeted to presumed Tesla employee Mighty Fuji, quote, "Are there any non-automotive products with plans to use 4680 that you know of?" And Mighty Fuji replied, quote, "Oh, good question. Everyone else always focuses so much on the vehicles in these Tesla subs. First time I've heard someone mention 4680 applications that aren't mobile. I can't comment on future products, but I can say that I'll be even busier very soon. It'll suck for me, but 65.6% of you will love it. The rest of you will be jealous," end quote. And a very smart person found this percentage matches the current home ownership rate in the United States exactly. So I've got to get me one of these 4680 Powerwalls. So use my referral code below and we'll get one of those in to experiment with and take a look at in detail. What I hope this means is that Tesla is able to start driving the cost of the Powerwall down significantly. We covered the chip shortage a couple of days ago, and I pointed out that this is likely to contribute to higher prices. But once that's sorted, perhaps by bringing chip production in-house via acquisition, they may be able to get Powerwall down to the 5K range, right? I mean, I would expect that to come with improved specs as well. Don't want to get greedy. But let's imagine that they give us twice the energy density at half the price. That would get us, 50 kilowatts of storage for 10 grand. Twice what I have here for half the price. It'd also allow for probably, I would expect anyway, especially with the tabless design, offer tremendous power delivery. You know, maybe twice what you can now, so you get 10 kilowatt peak now. So maybe a 4680 Powerwall could be 20 kilowatts of power delivery per Powerwall, which would support the house and charging the car without having to draw from the grid at any particular time. But you can see here in the Tesla app, let me bring that up, that when we're charging, we draw quite a bit of power, especially when we're charging the car. Let me see if I can get it to pull up today. Yeah, there it is. So in the Tesla app, if we go to PowerFlow, we can see each day when we're plugging in the car. Like right here, we're getting up to, see, it's catching up to me. We're getting up to 16 kilowatts. You can see that on the far left-hand side. So if we take that, I mean, that's running both the AC and the oven at the same time. And I bring it up all the time. You know, what are we going to do when we add the next electric car? But looking at the app, we can see the car is pulling about 10 kilowatts when charging. That would mean that we probably need up to 30 kilowatts of power to support the house and both cars charging all at once. And if the theoretical 4680 Powerwall doubles the power output from 10 kilowatts to 20 kilowatts for each wall, if you have two stacked batteries, you get 40 kilowatts of output, which is simply incredible. Now, that's the peak rate. Of course, the Tesla Powerwall, on its own, I think is, generally rated for 7 kilowatts. But even if you double that to 14, you'd get about 28. That's very close to the 30 I would need. It may mean that we would have to reduce the power draw that we allow the cars to charge at. There isn't any particular harm in charging slower. It just means that we get less mileage back, for a particular amount of time. I mean, at the moment, we would spend probably, well, we can see in the app actually, we would spend, it looks like about 3 hours charging the car every night. So if we were to increase that from 3 hours to 6 hours, that's not a tragedy for anybody. But I mean, this is all speculation, right? So let's see if we get anywhere near that kind of performance and price, from Powerwall. And let's talk more about how they might get there with this next story. So, Electrek reports on LG Energy and Samsung SDI bringing the 4680 form factor to production. Electrek says, quote, LG Energy Solutions and Samsung SDI have both reportedly completed the first sample cells of Tesla's 4680 battery cell as they eye a big contract from the automaker, end quote. And I would assert that it was pretty damn quick that they brought that to market. And how do you think they're getting those lines up and running so quickly? They purchased machines from Hybar and Grumman Engineering, aka from Tesla, to get these production lines up. And I don't think that's all that they're purchasing from Tesla. I'd be willing to bet that they're also licensing processes and chemistries from Tesla. It's absolutely possible that the deal with Tesla will simply be a discount. So they're not going to be paying a licensing fee, but getting the batteries for a lower price. So there's less accounting that has to be done, and potentially fewer taxes that need to be paid. But once the cat is out of the bag, these manufacturers are going to want to provide those superior products to other energy storage and electric car manufacturers. And that's where the licensing is going to come in. Of course, it's not a huge advantage to other companies with battery storage solutions or electric cars if they haven't designed their products to accommodate the new form factor. So it might not be something we see in the marketplace for another few years. Of course, giving Tesla not only a head start, but then even when the others catch up, Tesla will be sipping profit from equipment sales and licensing deals from the battery manufacturers way up the supply chain. I mean, Tesla is a ninja sneaking profits, not just from their own cell production capacity, but from all others that adopt either probably the 2170 or the 4680 form factors. Now, if we look at Tesla, do I have it up? Yeah, I do. So here we have last year's financials. Let's bring it full screen. And you can see the energy generation and storage line doesn't break out into, licensing or manufacturing goods. All it does, it just lumps everything into one big number. And I would assert this is because the energy storage and generation portion of the business is pretty immature. So they're not going to put a lot of focus on it. They're going to break out everything that's interesting that's happening right now. And all that happens to be in the automotive industry. So if we look at last quarter's financials for Tesla Energy, we can see they don't provide any detail on Tesla Energy that we can use to deduce equipment sales or licensing fees that they are already starting to accrue. But if we look in the 10Qs filed with the SEC, we can see some better detail under revenue recognition. You'll see a line here, energy generation and storage leasing. Now, this might strike you as odd since you can't lease a solar roof or a Powerwall, but I will say it has two possible sources. So first, it could be just residential power purchase agreements acquired from Solar City, but secondly, it could be leased production equipment for battery manufacturers. Now, you'll see that Tesla had securitized those power purchase agreements back in 2017. I have an article up from Global Capital from back then. Once they purchased Solar City, they did discontinue that product offering. Now, if we go to other 10Qs, so you'll see each 10Q shows a couple of years. This one shows 2020 and 2021. Let's pull it full screen so it's a little easier to see. So you can see these two columns are broken into 2020 and 2021. And then we look at the next 10Q that I've got pulled up. I'm in the second breakout of energy leasing and storage. It doesn't show the 2 years. Oh, yeah, it does. It's just even smaller. So that's for 2018, 2019, and then the other 10Q has 2020 and 2021. So we have 4 years covered. But all of them show very consistent energy generation and storage leasing numbers. So we're at like 112 here, 112, 111. It goes up slightly in 2020 to 120. But since it's consistent over the 2018 to 2021 10Qs, I would say that it probably implies that we're looking at stable revenue stream rather than a ramping revenue stream, which we would expect to see from manufacturing equipment or licensing for a ramping 2170 cell. Back then. So I mean, don't forget the 2170 cells are being provided not just by Panasonic, but also by LG, Samsung, SDI, Cattle, and probably other manufacturers as well, like Northvolt. So I would expect these battery manufacturers to have purchased equipment from the engineering firms Tesla has acquired over the last couple of years and be paying some licensing fees to them. Now, I don't expect these companies to make their own manufacturing line equipment. They're going to have to find some supplier. But we can't really tell if that's Tesla here, in this particular case. But, more detailed financials that disclose some of these, revenues is something to keep an eye out for as the 4680 ramps and as the Tesla Energy division, matures and they start giving us more detail. Bottom line, though, for Tesla, is that they need as many cells as possible. Any supplier that can bring along, any sort of cell supply is going to help ease cell constraint and drive down costs for you and for me. So hopefully on those rumored 4680 Powerwalls specifically. And that wraps the news segment this week. After a break, we'll talk about my idea for expanding Tesla's total addressable market. Something I've been thinking about for a while is the solar glass roof manufacturing ramp. There were reports as far back as 2019 that production was ramping to 1,000 roofs a week, but we've seen over the last 18 months that the bottleneck is not production, it's installation. Now, Tesla does have they have taken on third-party installers that have largely been able to see some success with the products. A couple of standouts, you've probably heard of them. I've got one here. This is Good Faith Solar. This one here is Weddell & Sons. And then we've also got, as far as I've seen anyway, American Home Contractors. They all have YouTube presence, as you can see here, and they've been a really great source of information on the solar glass roof. But what if Tesla were to allow those installers to offer the glass roof without solar? I see three huge benefits here. Number one, homeowners get a beautiful, low environmental impact, super strong roof that may last their entire lives. Number two, the installers get access to a unique, value-add product that they can later upsell to solar. And three, Tesla gets to ramp the glass tile and expand the market for solar glass roof by pre-selling the glass-only roof now. Now, I accept that the upsell to solar isn't going to be super simple, but the merits of the glass roof alone are many. And this wouldn't be a distraction from Tesla's core mission. In fact, it could heavily subsidize their current energy business and help it see better installation efficiencies. Much of the installation would already be done. So let's look at some figures. If you can see here, let's go ahead and bring it full screen. In fact, these are marketing sizes done. So if we look at the total addressable market for roofing materials, the opportunity they have, I would say, is pretty substantial. So these are numbers from Grandview Research. They estimate the 2019 global roofing materials market to be 120 billion, more or less. I see Tesla becoming a very interesting roofing alternative that could take, I don't know, 10% of that total market. That would be more than 10 billion a year that Tesla could sell in glass only roof tiles. That would not include any labor at all. Now, that labor would be left to regional installers and service providers while priming the market for Tesla's solar glass roof product as a possible future upgrade. Upgrading from a glass roof to a solar glass roof would be much faster and much more efficient, as those who had opted into the glass only tiles are added to the solar market over time. It's a strong likelihood, I think, as battery costs decline and installation efficiency is achieved over that period. Let's take a look at our final contract where they break out the solar glass and the non-solar glass portion of the roof. If I take it full screen and scroll down, we can see here that the non-solar portion totals $15,254 for install. I can't highlight it, but it's over here on the right-hand side. And that is for 2,400 square feet of coverage, more or less. Now, this isn't just material costs. This is for the entire roof, tear-off, replacement, less the solar equipment and solar labor. So it's tough to tease out the labor on just the roof portion of it. The price of the glass tiles only, it's just hard to figure out. Like, that's kind of where I would want to take this. It's widely recognized that Tesla's been spending way too much on labor to install the product, especially at the time of the contract we have. But if we look at other tempered glass products, we can find complex shelving at comparable prices, or comparable sizes, and thickness. And they retail for, where are we at? Yeah, they retail for about, $40 to 75. So let's call it $60 each. Covers about 4 square feet in its installed configuration, bringing the price per square foot to $15. Now, that means the retail material price would roll up to $35,000. It just doesn't fit into this pricing structure. So let's look at an alternative. You can see Alibaba that they have float glass options. They return a hydrographic tempered glass sheet at about $4 per square foot. And if you've ever tried to buy something from Alibaba, though, you'll know that it's going to have some huge asterisk on it when it shows up. But still, we might just use this benchmark material cost for Tesla's non-solar glass tiles. That would put, the tiles material cost, retail cost at $9,528, leaving only about $5,000 for the remaining materials and labor. So this is probably high too. So, if Tesla is going to be competitive here, they need to come in at a comparable price, probably to asphalt shingles. To get down, I don't know, $1 or $2 in order to support the cost structure that would support the economics of this offering. So let's estimate $2 per square foot on the high side, but we're talking premium materials here. That would bring the retail material cost down to about $4,700 and would imply a manufacturing material cost of about $2,500 or below. Not sure it's possible, but I don't know. I'll see if I can get my brother-in-law on a podcast to dig further into this. He has a good understanding of what envelope solutions would cost, and assuming they are able to hit this price and capture 10% of the market, we're looking at, $1.25 billion in annual revenue just from material sales. Now, if Tesla were truly able to get material costs low enough to be competitive with asphalt roofs, a 10% market share might be quite achievable by the end of the decade. Anyway, let me know what you think. Does this make any sense to you at all? Do you think installing glass roofs only would be meaningful in reducing the sales friction for those that want to later upgrade to solar and storage? I don't know. Do you see the material impact, the environmental material impact, reducing in any meaningful way with glass over asphalt. I mean, both are recyclable, but if you've gone through a roof tear off with asphalt, you know how dirty and gross it is. It does include petroleum, whereas glass products don't require any petroleum. They still require some energy. But do you even think consumers would prefer the look and durability over those other options, including slate or metal roofs? Let's talk about it. That will wrap episode 11 of the Tesla Power Podcast, the unofficial Tesla Energy community. I'm Aaron Brady. My referral code is in the description. Go to ts.la/Aaron62310 to place your order, and we'll get you a few bucks off or some free supercharging. I love that you made it this far. Let's do it again next week.